Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. This video is being recorded on the early morning of Monday, August 18th, 2025. Thank you so much for tuning in to this edition of Macro Mondays. Hope you all had a great weekend. Hope you have a great week ahead. And let's get it started off here with some comments on the gold and silver stocks. In this video, I am going to explain why they are hitting their prime window right now to outperform gold and silver as well. The silver stocks outperforming silver. I'm going to talk about why that's happening and perhaps how long it could continue and what to look for that could tell us when that outperformance might start to slow down and eventually come to an end. So without further ado, let's get to the video. Okay, so starting off here, I've discussed this in my book and also in past videos, and that is gold divided by the CPI, or the inflation-adjusted gold price. They're the same thing, whatever you want to call them. This is charted right here. This is monthly data, by the way. This is a great fundamental and also technical indicator for the gold stocks, but this data, it comes out monthly, so there is a bit of a lag. But we can see historically that the gold stocks are almost mirroring the trend in the shape of this chart from a bird's eye view, from a very long-term perspective. So here we have the inflation-adjusted gold price here. This is the Barron's Gold Mining Index. And we can see here this huge cup, gold against the CPI from 1980 to 2011. And then you have this handle here, almost like a double handle. The cup here, and then you have this handle, and then you have this cup. Or this is almost, let's see here. This is a cup and handle by itself. So I don't want to confuse you, but there's a lot of cup and handles within this pattern. But anyway, we can see the shape here. Like, let's just look since 2011. Look, this is fairly similar. You have a potential cup here. You can see here, cup here, cup here. You have this move here, this move here, this move down over several decades. Now you can see it there. This move up here. So it's clear that the gold stocks, from a bird's eye view, they tend to follow the inflation-adjusted price of gold. Why is that? Well, because the gold stocks trade not based on the gold price, but based on how much cash flow their mines are generating. How much money are they making? How much money are the mines generating? What is their cash flow? And so a great indicator of that is gold divided by the CPI, gold divided by inflation, which is a good proxy for the costs of gold miners. So that's why this works so well. And also, it works for silver too. Now here we can see this is silver divided by the CPI, so the inflation-adjusted price of silver. And so this is going back to 2011. So this is monthly data. And this, by the way, has not updated this month. So this is a month ago. And so this month we're probably going to see a candle like this. So I've talked about in other videos. This is SIL, the large cap silver stocks here. This has broken out of this 12-year-long base here. Here's SILJ, the silver juniors, getting very close, just right behind. And this is the inflation-adjusted price of silver. Look how similar this chart is to these two. Now, they're not going to be perfect, but the general trend and the shapes are very similar. So it works for gold and it works for silver. So we are coming in to a prime window. I'll just go back for a second, because I didn't mention this. This is the last several months. This is gold against the CPI. So this has broken out of a 45-year-long base. This is extremely significant. And that's because gold, of course, broke out to a new all-time high a year ago, and we're not getting cost pressures yet. So that's what's happening. And it's similar in silver. And so if silver were to break 50 fairly soon before inflation really starts to pick up again, you're going to see this thing zoom like that. And it may zoom anyway, even if inflation picks up, because it could go from 50 to 95 in 12 to 15 months, as I've said in past videos. And so if this happens and that zooms like that, that means silver stocks, they're going to do the same thing. And so when these things happen, or as they're happening, this is the time when the stocks are going to outperform the metals. And so we're already seeing it. Here's GDX against gold here. This blue is the 200-day moving average. And so what happened? This is a breakout of, this is like a 2-year-long base here. Maybe this is an inverse or a double bottom here, potential inverse head and shoulders pattern, a complex one. So this is a clear breakout. And this is another 12-year long base here. You have a peak here, peak here. You don't really have a peak here. But this is probably going to continue up to right here. So gold stocks, GDX, will continue to outperform gold. Here's GDXJ against gold. Obviously, it's lagged a little bit over the long term, but we can see here, this is actually a 3-year long base going back to 2022. And this just happened very recently. So pullback here, nice breakout here. 200-day moving average is turning up. I love this chart, especially right here. So this baby should continue like that up to this 12-year long resistance up to here. And now let's look at the silver stocks against silver. So here are the large caps, SIL divided by silver, and this is also broken out. You know, in the last couple months, I should say the last month or two, it zoomed higher, but before that, you had this breakout here from a 3-year long base. You had a breakout here in the spring, sharp pullback, boom. Successful retest, boom. So this is going to continue higher like that. SILJ, silver juniors against silver, same thing. Look at this. Not a perfect base here, but this broke out from a 2-year long base here. Initial breakout, but then you could say it was a failed breakout here again, but then it popped higher. But again, you take a bird's eye view, this is a breakout. So, you know, who knows? This could pull back a little bit. Both of these could pull back a little bit more, perhaps, before they move higher. But we can see the miners are outperforming the metals, not just in gold, but silver as well. So another thing is the miners are also outperforming the stock market. So I put it all on one chart here. Here's GDX against the stock market, GDXJ against the stock market. Here's SIL against the stock market. So I left out SILJ, but you know, it's so similar to SIL. But anyway, we can see what's happening here. GDX against the stock market. This is a 4-year long base. Now it hasn't quite sustained a breakout. You had an initial breakout here. It's pulled back. But this is consolidating bullishly here. So far, it's holding this sharp move. It's digesting, it's consolidating. The long-term moving average, 200-day moving average is trending up. So this thing might consolidate a little bit more, but eventually it's odds favor it pushing higher, trending up to this point here. And again, this is an 11-year long base that it's coming up to. Here's GDXJ against the stock market. So this is right here. This is a 4-year long base. You go back here. This is a 3-year long base. So it broke out of the 3-year long base. Right here, it made a 4-year high, but it pulled back inside of the base. And this action here that I've highlighted, this is a bullish correction because it's digesting this surge. It bounced here from support, bounced again. And so, yeah, it could go sideways for a little bit longer, but this is going to work its way higher ultimately. Now, here's the silver stocks against the stock market. Now, this is right now, I should say, this is wrestling with a 3-year long base right here. But it could pull back a little bit to the blue line. But again, eventually, the probabilities favor this trending higher like that. And you could have a measured upside move of, these are just fractions, so they're difficult. 45, 25. So this could probably measures up to here. Doesn't seem like a lot because this is a log chart, but in percentage terms, that's a big move. And a very significant ratio chart, which I've showed before. Here's GDX against the 60-40, GDXJ against the 60-40. Here, I've highlighted the action here. This is a bullish correction. You know, surge here, it's digesting that surge. It did test several months ago. That 12-year long resistance here. This here also 12-year long resistance here. So this will break out before GDXJ does, but if this breaks out, you know, this will push up here, which is a big distance, and test this. But, you know, back to this, GDX breaking out here of this 12-year long base, that signals that money is moving out of conventional investments, the 60-40, stocks and bonds. Money's moving out of those places and into gold stocks. I mean, a year or two ago, we were talking about gold against the 60-40. Gold broke out, so we're talking a little bit silver against the 60-40, which looks similar to this. They're fairly similar. So you're really in a strong bull market when this baby breaks out. And then it breaks out for silver too, where money is fleeing stocks and bonds and going into gold stocks. And then silver too. because this and silver against the 60/40 will probably break out at the same time. So stepping back, it's clear we're in a sweet spot for gold and silver miners and also juniors, and that's going to continue. Gold is crushing it in real terms. It's outperforming inflation. It's rising faster than inflation. Gold is a new all-time high territory. So even if inflation pops up a little bit, gold's move can still be magnified because there's no technical resistance. It's not moving from 15 to 1800 and then a bunch of sellers are coming in, or it's moving from 17 to 2000, then you have selling. No, it's a new all-time high territory. The moves are going to be so much bigger, and they're dwarfing oil, which hasn't even started moving up yet, or inflation, I should say. They're dwarfing their cost pressures, which, yeah, they're moving up a little bit, but they haven't begun to accelerate yet. So that's why we are where we are. And one point on top of that, silver. What happens when silver breaks 42 and moves up to 50, then it breaks 50 and it's 670. Silver stocks are going to explode because the inflation adjusted price is going to explode. So even if inflation is going up a little bit at that, or even 10%, that's a moment when silver is going to be making massive moves in a short amount of time. Now, all this sounds super bullish, and it is. We are at a super bullish point, but I do want to point out the other side and when this trend might end, or what we should look for to explain when the trend could slow down. And that's when inflation really starts to ramp up. And what's the biggest proxy for inflation, or the biggest cause of inflation in many cases? Oil. And so this is oil right now. And this is a big reason why miners are really killing it, because gold has made this huge move. And here's gold divided by oil. So gold divided by oil broke out right here. This was a cup and handle breakout, March of 2024. Gold broke out against oil. It broke out of at the time, that was a 3.5-year long base right here. So it broke above 30. It moved up to, looks like 60. It's correcting, it's consolidating. So this is in good shape. The probabilities favor this continuing to increase. You look at the oil chart here, this is not a bullish chart right now. The thing to look for with oil, I could have put a blue line here for support. Maybe this does a double bottom. Maybe it tries to base here and starts to move up like that. There is a possibility. So oil 63 right now. I think this is 75. So this is a key level, 75, and then you have 90. So oil, if it starts to move back up and it breaks above 75, yeah, that's a bit of a warning sign for the miners outperforming. And then you could say more of a warning sign if it reaches 90. But I don't know if that's going to happen until maybe 2026. And, by the time that starts to happen, yes, inflation will be picking up again, but gold and silver could go up 50%. Silver could go up 50 or 100% at that point. Gold could go up 30 or 50%. So the point I'm making, we are entering the sweet spot, and this is probably going to last, I think, conservatively for another year, maybe 18 months. And so at that point, we could reassess what the outlook is for miners outperforming the metals. But don't get it wrong here. We're in the real sweet spot now. This is going to continue for at least another year, probably a little bit longer. That's all for this video. Thank you so much for tuning in. Leave a comment. Let me know what you think. I hope you guys have a great week, and I'll talk to you guys again in the next video.